Hello, everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfield. And man, just when you think you've figured out what these markets are going to do, they throw you a curveball. Beginning of last week, we saw a lot of selling pressure in the broad market indexes. Things look kind of gloomy. And all of a sudden, Tesla goes, here, hold my beer. Let me show you my earnings numbers, which are fantastic. And boom, we saw technology rocket to the upside, had a fantastic Thursday and Friday session, and really all of tech having great momentum going into the weekend. Now, some other markets had some weakness. We didn't see great moves up in the S&P, but a little bit of strength those last couple of days. Now, we move into a week that has some monster news coming out, not only from the earnings side, but also on the economic side. So I'm going to start things off, as usual, with our earnings calendar. And there are a lot of really big names in here, so get a pen, get ready for some major names this week. We start things off on Monday with some smaller known names. Of course, you've got Ford, Waste Management, Welltower, and Cadence Systems. On Tuesday, brings you Alphabet, Visa, AMD, McDonald's, Pfizer, Anheuser-Busch, or AB InBev with BUD, and of course, American Tower. Wednesday, the big names continue to drop with Microsoft, Meta, Eli Lilly, AbbVie, Caterpillar, Amgen, and Starbucks, which had some interesting news on their earnings last week. On Thursday, you've got Apple, Amazon, MasterCard, Merck, Uber, ConocoPhillips, and the Intercontinental Exchange. And just when you think it's done, it's not. We've got stuff on Friday this time. The largest cash holding company in the United States, Berkshire Hathaway, reporting earnings, ExxonMobil, Chevron, and Dominion Resources. As you can see, a pretty full plate there. You've got multiples of the Magnificent Seven. You've got Alphabet, Microsoft, Meta, Apple, and Amazon. That's 5 out of 7. And of course, last week we got our Tesla number. So we'll see how that's going to rock this week. Certainly, it's going to be a lot of action. And all of those big names I mentioned, Microsoft, Alphabet, Google, Apple, and Amazon, all reporting after hours on those respective days. So it'll be a fun thing to watch. Now let's move on to the employment data. Of course, jobs is a major focal point for our markets, and our central bankers also saying that employment is key. Well, what are we going to be looking at from that employment perspective? We've got 4 or 5 pieces coming out this week. We start things off early on Tuesday at 10 a.m. Eastern Time with the JOLTS job openings. On Wednesday at 8:15 a.m. you have the ADP non-farm employment change. Thursday at 8:30 a.m. unemployment claims, and then the big daddies near the tail end. On Friday at 8:30 a.m. you have the unemployment rate and non-farm employment change. Of course, Jerome Powell has been talking about the unemployment rate and how they foresee it in creeping higher and higher. And it wasn't just Jerome Powell, it was other voting members from the Federal Reserve. So that was something to keep our eye on. Then also they talked about growth. The central bankers have been talking about 3 things: employment numbers, growth, and inflation. And lo and behold, this week we have all 3 of those. Let's move on to our next topic, which is going to be GDP. This is the first official reading of GDP. It's called the advanced GDP numbers. That's expected to happen Wednesday at 8:30 a.m. Eastern Time. You can see, nothing really noteworthy from the charts here. We are expected to come out at 3%, so slightly higher than where we are now. Again, that's an annualized rate, so good to see the number creeping up here. Obviously, we'd like to see it much higher, but 3% historically isn't atrociously bad. Improvement is what we're looking for, so anything above that 2.8 mark would be great. Anything below that 2.8 mark would be, of course, bad. But we're not done. We look to the most important metric that the Fed has pointed out over the past couple of years, and that is the core PCE price index, or inflation. That will happen Thursday at 8:30 a.m. Eastern Time, and you can see here on the hard red edge, we're at 0.1 right now. That's really good. Remember, if we annualize this 0.1 times 12, then that's a 1.2% inflation rate, which would be lower than the Fed's target. But wait a minute, it's annualized, and that was only one period of data. If we continue on, the expectations are that we're not going to come out at 0.1%. We're actually expecting we're going to come out at 0.3%. So a big jump up there on the core PCE price index from the expectation perspective. We'll see if expectations match reality. And finally, of course, it is the favorite time of year for myself. It's Halloween time. So on behalf of all of us here at Trading Academy, wish you a very happy Halloween. Go do something spooky. Hopefully the markets don't spook you too much on that Thursday. They will be open, and it's going to be a fun day to be sure. That, my friends, is your Monday Morning Must Knows. We'll see you next week.